name is Brian Salmon. I'm a property appraiser at the Board of Equalization here in Sacramento, and I'd like to welcome you to this presentation for nonprofits and faith-based organizations. This presentation is designed to provide an introduction to California property tax exemptions for eligible groups. To begin with, in California, all non-governmentally owned property is taxable unless specifically exempt per the California Constitution. Depending upon ownership and use, eligible organizations may need to contact the county assessor and in some cases the Board of Equalization as well in order to receive an exemption. When we refer to property, we're speaking of land, improvements to land such as buildings and other structures, and business personal property. Broadly speaking, there are two types of property tax exemptions: those administered solely by the county assessor, and those jointly administered by the assessor and the Board of Equalization. An example of an exemption administered by the assessor is the homeowner's exemption, whereby a homeowner who owns and occupies their principal place of residence on January the 1st may be eligible for a savings of approximately $70 a year. If you have this exemption, it should be reflected on your property tax bill. If not, contact your assessor's office. Another residential exemption is the disabled veteran's exemption. A veteran who is 100% disabled or is being compensated at 100% because of a service-related disability or disease, or the unmarried surviving spouse of such a veteran, may be eligible for an exemption on their primary residence. The basic disabled veterans exemption was $100,000 in 2006 and has been raised annually. Additionally, claimants who meet income ceilings may qualify for a higher exemption amount. In 2006, it was $150,000. This exemption has also been increased on an annual basis. Church exemptions are available for owned or leased real and personal property used exclusively for worship and parking by a religious organization. Religious organizations may qualify for exemptions of owned real property and owned or leased personal property used for worship and other purposes by applying for a religious exemption. The religious exemption may also exempt preschools, nursery schools, kindergartens, schools of less than collegiate grade, or schools that are both collegiate grade and less than collegiate grade, as well as appropriate parking areas. One of the advantages of the religious exemption is that it only requires a one-time filing. Public school exemptions are available for property leased by public schools and used for public school purposes, including property used by the University of California or state colleges. Charter schools may also qualify for the public school exemption. The college exemption is used by post-secondary education institutions and may be used for owned or leased real or personal property. Stanford University, for example, uses the college exemption to exempt its property. There are also exemptions jointly administered by the Board of Equalization and the county assessor. These are the exemption for veterans organizations and the welfare exemption. The title welfare exemption derives from the fact that the qualifying organization is granted the exemption because of the welfare it extends to the community. A number of faith-based and nonprofit organizations file and qualify for this property tax exemption. Some qualifying organizations include religious organizations, charities, museums, theaters, zoological associations, open space preservation organizations, organizations involved with rehabilitation, hospitals, clinics, low-income housing, nonprofit schools, historical associations, and many others. The welfare exemption is granted when the organization receives an organizational clearance certificate from the Board of Equalization and files a welfare exemption claim and qualifies with the county assessor. A wide variety of religious, hospital, scientific, and charitable organizations file and qualify for the welfare exemption. This exemption is used for property owned by a qualifying organization. It is only used for leased property if the owner of the property also receives the welfare exemption. Section 214 of the Revenue and Taxation Code states that a qualifying organization must be organized and operated for one or more of the following exempt purposes: religious, hospital, scientific, or charitable. To be eligible for the welfare exemption, the claimant must be a nonprofit organization or a limited liability company with nonprofit members. The organization must be organized and operated for one or more of the four qualifying purposes: religious, hospital, scientific, or charitable. The organization must also have a current exemption letter from the Internal Revenue Service stating that it is a valid 501c3, or a letter from the California Franchise Tax Board stating that it is a 23701D. The property for which an exemption is claimed must be used exclusively for an exempt purpose. The welfare exemption involves two agencies. The Board of Equalization reviews the organization's formative documents and issues an organizational clearance certificate to eligible groups. The local county assessor reviews the property for qualifying use and issues the exemption. Some of the requirements for an organizational clearance certificate are current articles of incorporation filed with the Secretary of State, tax letter from Internal Revenue Service or Franchise Tax Board, annual financial statements, and documentation supporting exempt activity. To file an organizational clearance certificate, visit the Board of Equalization's website at www.boe.ca.gov. Under How Do I, click Property Tax Information. Find Information About and click on Welfare and Veterans Organization Exemptions. You'll be taken to the Organizational Clearance Certificate area of the website, where you'll find claim forms and links to more information on the exemption and the process. With your claim, you will need to submit current articles of incorporation filed with the California Secretary of State, a valid tax letter from Internal Revenue Service or Franchise Tax Board, copies of annual financial statements, and documentation of the exempt activity of the organization. This can take the form of pamphlets, brochures, newspaper articles, or other materials supporting the organization's exempt activities. Since the assessor may not grant a welfare exemption until the organization has received an organizational clearance certificate, it's important to start the organizational clearance certificate process as early as possible after acquiring property. Once an organization acquires property that will be used for an exempt activity, it should begin the organizational clearance certificate process, as well as complete a welfare exemption claim available from the assessor of the county in which the property is located. Welfare claims are often available on the assessor's website or else directly by contacting that office. If the property is to be used for low-income housing, housing for elderly or handicapped, or rehabilitation of individuals, supplemental forms in addition to the welfare exemption claim are required. These forms, too, are available through the local county assessor. The assessor will want to know that the entire property is used for exempt purposes. Please be sure to include any other organization that may use the property, either on a permanent or temporary basis. Once a welfare exemption is granted, the organization is required to refile annually by February the 15th. This is an opportunity to inform the assessor of any changes to the use of the property that may affect the exemption. An organization is only required to file once for an organizational clearance certificate. However, it is required to file a welfare exemption claim for each property for which it seeks exemption. If the property was acquired prior to January the 1st, 2009, it must have been used for exempt purposes within 90 days. If the property was acquired after January the 1st, 2009, it must have been used for exempt purposes within 180 days. Once the welfare exemption is submitted to the assessor, a representative from that office will visit the property to review its use. The welfare exemption requires annual filing. To avoid penalty, the claim must reach the assessor or be postmarked by February the 15th. There is a retroactive provision to the welfare exemption, whereby eligible organizations may be able to file for exemption back to the date of acquisition up to 4 previous years. The late filing penalty of $250 per year will be deducted from any refund of taxes. The assessor will require a welfare exemption claim for each year the organization is filing. As a vital part of the community, exempt organizations are frequently approached by individuals or groups interested in using their property. In order to retain a full exemption, outside groups must be exempt, and their use of the property must be for an exempt activity. The use of the property one time a week or less does not require the outside organization to also file an exemption claim. Use of the property must be incidental with no fundraising, and the property owner should have a copy of the group's tax exemption letter from Internal Revenue Service or Franchise Tax Board. Use of the property more than once a week requires the outside organization to also file a welfare exemption claim. If a property is not completely used for exempt purposes, or it is in excess of what is reasonably necessary to accomplish its exempt purpose, it may be granted a partial exemption. The assessor's office will make an annual determination based on information from the welfare exemption claim and site visits to the property. For financial or other reasons, exempt organizations may decide to lease portions of their property to non-qualifying groups. Those portions will not qualify for an exemption. The assessor's office may then grant a partial exemption prorated on the exempt versus non-exempt use. The value of property used for non-qualifying purposes is subtracted from the overall exemption. Because of the possible impact on taxes, it is important that any decision regarding the use of property is thoroughly discussed with the county assessor. Organizations filing for low-income housing will also need to receive a supplemental clearance certificate from the Board of Equalization. The claim will require copies of the grant deed and regulatory agreements or deed restrictions regarding low-income requirements attached to the property. The following slides illustrate a number of helpful links. You'll be able to access them at the end of this presentation. Other useful information is the link for the Organizational Clearance Certificate and Supplemental Clearance Certificate, Welfare Exemption Claim Forms and Assessor Information, Seminar Schedule, and the ability to link on Contact Us. We'd like you to know that we're here to help in whatever capacity we can. In addition to the information presented here, you may also be interested in attending one of our free seminars. Please see our website for a list of upcoming events. Finally, we want to take this opportunity to express our appreciation for everything you do for the citizens of California.